Are you feeling lost in the current crypto bull run, unable to spot the genuine leaders from the crowd? You're not alone. But what if I told you there's a way to cut through the noise and pinpoint the real winners? Join me, Deron Wagner, with over 2 decades of trading expertise as we unveil a foolproof method to identify not just any altcoin on the rise, but the absolute cream of the crop. In this video, we'll guide you through our simple, actionable steps for locating lower risk buy points among the elite altcoins, complete with chart breakdowns for potential entry points. Plus, stick around for an exclusive bonus. At the end of the video, we're going to give you a sneak peek into potential lower risk swing trade entry points into Bitcoin. This is perfect if you think you've missed the boat. So don't let this bull market pass you by. Hit that like button, subscribe, and let's dive into the charts together. When looking for potential trade setups in any market condition, the first thing we want to do is we want to see the big picture of the overall market. And for that, we look at the benchmark charts of Bitcoin and Ethereum, the king and queen of crypto, and we set up our TradingView platform like this, with the weekly time frame chart on the left side and the daily chart on the right. And by doing so, we're able to get a big picture view on the left side, kind of a bird's eye view, with the shorter term view on the right side. And that helps us see that we've got all of our multiple time frames aligned because we use multiple time frame analysis with our swing trading strategy. And coming into the year, when we started off 2024, we see that we came into a 3-month uptrend when we started off 2024. We had already been trending higher on the weekly chart here. You can see from October, November, December. And when we entered into the beginning of the year, Bitcoin was actually in a sideways consolidation pattern for about 4 weeks, trading in a tight sideways range near its highs. Now, if we drill down to the daily chart, although it looks really like a tight consolidation on the weekly, look what happens when you look at the daily chart. It looks a lot choppier. And that's why looking at this big picture trend is important, because it can remove some of the noise of the shorter term charts and make the trends kind of more clear. So let's go ahead now and look at the daily chart. So we came into the beginning of the year with an uptrend established and also a sideways consolidation. Now, when we came into the new year, we knew that on January 10th, the SEC was scheduled to give their decision on whether or not they were going to approve spot Bitcoin ETFs. And in the lead up to that, speculation leading up to that, there was a bit of a rally leading up to that news. Now, when I was a new trader, I anticipated big news events like that would often have a positive impact, but I soon learned that what happens is people typically buy the rumor and sell the news. So we anticipated actually a negative reaction to the price of Bitcoin right after the news was released. And we told all of our members of the MTG Crypto Tribe in the chat room, we said, we're getting out of all of our positions ahead of the news announcement. And that's what we did. We actually got out of all of our positions right before this announcement here, which turned out to be a prudent decision because the market did sell off sharply thereafter. And that was really just kind of a knee-jerk reaction. The reason we anticipated that was typically the people were already buying in anticipation of the news. So when the news is released, people take profits and sell into that news. Now, that's the short-term reaction to news like this, but the longer-term reaction is obviously fundamentally very positive, because it means that now institutions like mutual funds and hedge funds and so forth can now join in and add Bitcoin to their portfolio. So it's very huge for the long-term legitimacy and credibility of crypto and Bitcoin specifically. But in the shorter term, we did anticipate this weakness. So after this happened, now the 50-day moving average came into play. That's this red line here. And we can see that the 50-day moving average is a really pivotal level that we watch. It's an intermediate term trend indicator. Typically, if we're in a steady uptrend and we pull back to this level, this is kind of the line in the sand. If we break below that level, then it often indicates an intermediate term trend reversal. So you can see here with Bitcoin on the daily chart how that 50-day moving average really did act as a pivotal level. I mean, first we tried to find support here on the first sell-off and tried to hold it for a couple of days and eventually broke. But after trading below the 50-day MA for only a couple of weeks, we popped back up into resistance to this. And then we got this volatility contraction. Notice how right after Bitcoin ran into the 50-day MA, we got this tight volatility contraction that lasted nearly 2 weeks. And as we always tell our members in the chat room, volatility contractions typically precede volatility expansions. So when you've got this tightening of the price action, it often leads to a breakout in one direction or the other. And the longer this volatility contraction, the more powerful the breakout. So you can see it's exactly what happened. this tight sideways action led to a breakout. And when Bitcoin broke above the high of that range, it started off into a new uptrend and led to a breakout above the mid-January highs to new swing highs and new 52-week highs. So taking a look at the big picture of Bitcoin right now, what we see is we've eventually followed through with that consolidation we had coming into the start of the year after a shakeout that ran a lot of stops undoubtedly here. Notice how the price actually dipped below the low of this month and a half long consolidation, running all the stops right here. And then we headed back up. Now, that's actually a good thing because all these people that bought up here at higher prices that got stuck, that's called overhead supply. And without running these stops and chasing these people out, then you've got more work to do to move higher. But a lot of those stops were run with the breakdown below this consolidation, which absorbs supply and enables Bitcoin to move higher with less volume on the way back up. Now, when we got out of our positions here in mid-January, we tested the waters with a few trades. As we were chopping around here, we got in some altcoins with relative strength, but really kind of spun our wheels until we saw a breakout above this level, which was our signal then to start to get more bullish. But still, even until we got above this high of January, this was all resistance here. We could have easily rallied up to anywhere up to the 48,000 level and stalled and chopped around longer. So we were actually a bit cautious in terms of new trade entries until Bitcoin broke out above its January high to a new 52-week high. So when you've got the price at a new 52-week high, that means that you've got less overhead resistance. It's blue sky because anybody who wanted out is already out by now. There's less sellers when there's no recent overhead resistance levels to contend with. So Bitcoin overall looking solid. Now that we've broken out to a new 52-week high, we're now in confirmed pullback buying mode. Confirmed pullback buying, which means that any pullback to support we're viewing as a buying opportunity. And stick around to the end of the video. We're actually going to show you if you're looking for a potential buy point into Bitcoin, we're going to show you where a relatively low risk buy point could be on a pullback. We'll give you kind of a plan there. So keep an eye out for that near the end of our video. Let's go ahead and take a look at Ethereum and see how Ethereum compares with the Bitcoin weekly and daily charts as well. We can see with Ethereum, it was really a similar picture to Bitcoin. We had rallied from October through December, but actually Bitcoin was leading the way. Notice how Ethereum barely got above its high from back in April of the prior year, whereas Bitcoin had already rallied well above that. So Bitcoin was showing relative strength coming into the year. And we can see here when we had the news, Ethereum also ran up in anticipation of the SEC news on the Bitcoin ETFs and then sold off just like Bitcoin and held support and eventually reclaimed its 50-day MA. And like Bitcoin, Ethereum has also now broken out above its January high to a new 52-week high. And in fact, Ethereum now has started showing slight relative strength to Bitcoin. As Bitcoin has been trading sideways for the past week, Ethereum has actually been setting higher highs. So we're seeing a bit of rotation out of Bitcoin into Ethereum, which is typically what we see. We mentioned that to the MTG tribe recently that this is a typical crypto cycle. You first see the strength in Bitcoin, then the money often rotates to Ethereum and then to the altcoin market. So we're seeing some of that rotation right now. But Ethereum, much like Bitcoin, is in a confirmed uptrend and we're in confirmed pullback buying mode. Notice the steady uptrend here, this green line, that's the 8-day exponential moving average. That has been acting perfectly as support. Every pullback has been met with buying right at that level. So you can see if you were looking for the first potential buy point in Ethereum, if you wanted a relatively low risk point, could be a potential pullback to this rising 8-day EMA. But again, near the end of the video, we're going to show you a strategy you can use to help you find possibly an even lower risk buy point for swing trade entry. The crypto market overall is becoming increasingly bullish, and we're now in confirmed pullback buying mode. But that doesn't mean that we sit on winning trades forever. Remember, we're swing traders. That means we look to capitalize on swings in the market. Yesterday, for example, we closed our last position in our portfolio for a gain of 37%, closing out an 8-trade winning streak. Now, despite the bullish market conditions, why did we get out of our positions? Well, we wanted to lock in profits into strength, and now we're looking for new potential pullback entries because Ethereum was starting to get a bit extended away from its 20-day EMA, this blue line. And although we're in a steady uptrend, markets don't go straight up in a straight line. They set higher highs, they pull back, set a higher low, set another higher high, and so forth. And even though we've got a nice confirmed trend here, we'd like to see Ethereum enter into a bit of a sideways consolidation to build a base that would allow the rising 20-day EMA to come up and provide support, or potentially a pullback, either a dip down to test the 8-day EMA and potentially an undercut that gets us closer to this 20-day EMA. Either way, we wanted to lock in some profits into strength on those winners. And based on what we're seeing today, that turned out to be a good decision. We are seeing some weakness and a bit of a pullback in Ethereum today as we anticipated. Now, one of the things about an increasingly bullish market is that at first glance, you might think that it's easier to find potential trade setups because everything's going up, right? Well, not so correct, because a rising tide lifts all waters. If the ocean tide is rising, then all the boats are also going to rise as well. And it's kind of like the market. You know, if Bitcoin and Ethereum are going up in a strong trend, just about all the altcoins are going to go up too. But this is where it actually becomes really important to be selective. In fact, what I wanted to say is that in a very bullish market, choosing the right swing trade setup is actually more challenging than in a neutral or less bullish market, because relative strength, which is one of our key secret sauces, is easier to spot in a weaker market. Because if most of the market's sideways or flat and you've got a few cryptos that are standing out, they're going to jump out at you. But in a market like this, it's not so easy, because everything is trending steadily higher, and it can be difficult to differentiate what are the best plays versus mediocre plays that are going to kind of follow the market. Let me give you a good example of what I'm talking about here. What you're looking at on this chart is a daily chart of CFX, an altcoin, on the left side, and IMX on the right side. Now, on this daily time frame, what you'll find now is that most altcoins are trending higher. Most of them are above their 8-day, their 20-day, and their 50-day moving averages in an uptrend. So if you're only looking at these daily charts, it can be really easy at first to say, well, what do I pick? But this is where the importance of zooming out and looking at the big picture, like we talked about earlier, makes all the difference in the world. Let's go ahead now and take a look at both of these cryptos, zooming out to the weekly chart. Look at the difference here, okay? So even though on a daily chart, everything's moving up, CFX is not even at a new 52-week high, right? So this is the beginning of, this is 52 weeks ago, is right here, right? So we're actually, still below the highs that were set within the past year. But IMX, on the other hand, take a look at IMX. IMX is well above its prior 52-week high, which was set just in December. And it's actually climbing up to test near its all-time high from its ICO in 2022. So see the huge difference there? And why does that matter? Well, it matters because what we're looking for is less overhead supply, less overhead resistance. And when you've got higher prices within the past 52 weeks, then as this price rises, all these people that got stuck at a higher price are looking to sell just to kind of lessen their losses or break even. So you've got more resistance holding down the price. Conversely, IMX, you got to go back several years to find any resistance. So anybody that wanted out is probably already out now. There's less overhead supply, less overhead resistance, and therefore it takes less volume for prices to move higher. So one of the first things we're looking for to separate the wheat from the chaff, so to speak, is you want to look at those weekly charts. The weekly charts become really important in a bullish market so that you can really truly spot relative strength. So the first thing we're doing right now in our scanning is we're looking at the weekly charts, and we're saying what is recently broken out to a new 52-week high, or better yet, at an all-time high. We've got several cryptos that are at all-time highs as well, and those are even the best because completely blue sky territory. But if we're coming across a crypto like we've come across in our scanning over the past few days, a lot of cryptos that have broken out on their daily charts over the past couple of days, but then you look at the weekly charts and they're not even at a 52-week high. So that's a great filter. A really simple way to narrow down your selection is focus on the weekly charts. And right now, we should only be looking for altcoins that have broken out to a new 52-week high or a new all-time high. If they haven't done so yet, then they're probably laggards. And we don't want to trade the laggards. We want to trade the leaders. Now, it's also important to understand that volume plays a key role here too. We've not seen a lot of volume, to be honest. We've not seen a lot of volume in the altcoins that have been moving higher lately on the daily time frame. But it doesn't take a lot of volume if you've got all the overhead resistance absorbed, overhead supply absorbed. It just takes more buyers than sellers for prices to move up. Nevertheless, though, if we're looking at getting selective and narrowing down our best choices, we're going to look for the altcoins that have the highest volume on their weekly charts, accumulation volume. Notice how IMX, even back in December, started to show accumulation bars on its weekly. lighter volume on the weekly on the pullback, and now volume starting to increase again, although it's still below average. So volume is another key signal you can use to help you make sure you're focused on the top quality potential altcoin trade setups now. So again, we're looking at the weekly time frame, new 52-week highs, strong volume. By the way, I wanted to show you one more example here of the importance of looking at multiple time frames. We came across this one recently in our scanning, AGIX, which is an AI sector crypto. So AI sector has been very hot lately. And we can see here on a daily chart that AGIX over the past week has ripped higher, nearly doubled actually in the past week, just straight up. And big volume, confirming with big volume. So this is looking really good on our radar. But now if we look at the weekly chart, and on the right side, by the way, here we've got Ethereum. So just looking at the daily charts, it looks like AGIX has more short-term momentum than Ethereum, which could be argued. But we zoom out to the weekly chart, and the AGIX is still below its 52-week high. Although it is nearing its ICO high. In fact, it tested that. That's what caused our pullback. So if we break out above the high, 52-week high, about 59 cents here, now that's a different story. But for now, we still have the resistance of these people trapped at higher levels, although not much resistance. All other things being equal, we've got Ethereum at a new 52-week high, and AGIX is not. So again, just keep in mind, it can be deceiving unless you're looking at a really short trading time frame. You know, if you're day trading, for example, then you're not so concerned about the longer term trends on the weekly chart. But for our style of swing trading, holding positions several days to several weeks, then those longer term trends do matter because we want to have momentum on our side. Once we've established the strongest altcoins for potential swing trade setups, the last thing is we have to make sure our timing is right. We don't just buy at any given time. If something's running and we missed a proper entry point, we don't buy, we wait. This is where patience comes in because it's very important not to chase runaway breakouts. If you miss the initial breakout point, you miss a breakout from a base, then wait, because typically after that breakout, you're going to get a pullback that tests the support level of that breakout. So it's not only about finding the strongest cryptos, it's about then having the patience and discipline within your trading strategy to wait for the proper entry points. And that's what we're doing now. We sold into strength yesterday. Our portfolio is currently 100% cash, but we're aggressively stalking a handful of cryptos in the market for relatively low risk buy points, because if you get a pullback, then you can clearly set your stop price just below the support level and you've got a high risk reward. So that's what we're doing now, is we're now scanning through the top relative strength altcoins to look for potential trade setups with relatively low risk buy points. Let's take a look at a few of the altcoins on our radar for potential trade entry in the coming days. And then we'll go ahead and wrap up by showing you a potential buy point for Bitcoin on a pullback as promised. First up is PENDLE, Pendle. And Pendle has been a relative strength leader throughout the entire year. In fact, Pendle was trending steadily higher well before the rest of the market. Notice how after January 10th, when the SEC news came out about Bitcoin, Pendle just started trending higher while the rest of the market was down for weeks. So this was an early relative strength leader. Notice how well Pendle was trending, holding its 8-day EMA with only a dip down to test the 20-day EMA. Buyers stepped in quickly, and it was in a steady uptrend for about a month and a half. Now, this is a good example of patience and discipline, because as this was trending higher, we said to members of the MTG tribe, we said, this is a top relative strength crypto, but we don't want to chase it. All right, we need a relatively low risk buy point. So we either need several weeks of sideways consolidation, or we need a pullback. And that's what we're starting to see now, is that pullback. So I'm going to go ahead and move the chart further to the right. You can see now, look what's happened is Pendle has started to pull back and it's dipped below its 8 and 20-day EMA. Now, you could say that that's not good, that it's below the 8 and the 20, but remember, it was an early relative strength leader. So it's a bit out of sync with the market, and it's still above its 50-day EMA. And most importantly, look at the volume. Volume has been lighter during the pullback. That's a good sign. We're not seeing heavy volume selling. And more importantly, this is where the weekly chart comes in. We zoom out to the weekly chart and take a look here. We can see on the weekly chart, steadily trending higher, and now we're pulling back and coming down to near the 8-week EMA, which is currently around 245. So this is on our radar, especially if it comes into the area of this 8-day or 8-week EMA and it starts to form a bullish reversal pattern. Now, it's also important to understand when we're looking for pullback entries, we don't just blindly buy on the pullback. After pulling back, we wait for signs of confirmation that a short-term bottom has formed, such as a bullish reversal pattern, or at least a higher low on the 4-hour chart. So we're not just guessing where the bottom is of a pullback. We're not looking to, nor are we looking to buy the absolute bottom either. We're looking to catch the meat of the move out of the middle with relatively low risk entry and exit points. So Pendle is definitely on our radar right now. If you're a member of the MTG crypto tribe, keep an eye out for a trade alert. If we spot an exact entry point with a relatively low risk buy point, we will send a trade alert, let you know our entry and exit prices for this setup. Another crypto on our radar right now for potential buy entry is SEI. SEI is a top relative strength leader, and we actually just sold SEI on February 14th for a 47% gain. We had bought it at 62 cents when it came down here and broke out back above its 8, 20, and 50-day EMA. We caught this breakout here, and we sold into strength just a few days ago as we tested resistance of the 52-week high. Now, we're actually looking for a potential re-entry point into SEI. We wanted to lock in gains there, but the price action has been really strong. Notice how the pullback is really nice because this prior breakout level, right, the breakout up to a new 52-week high now should act as support. Remember, the most basic tenet of technical analysis is that a prior level of resistance becomes the new support after the resistance is broken. So after we moved above this high, this is now support. And if we draw a horizontal line, you can see that here. Notice how, as we pulled back over the past few days, that this is now acting as support. And also we've got the 8-day EMA showing confluence with this horizontal support level. So when you've got multiple levels of support aligning up with one another, that's called confluence, and that increases the level of support that's there. And that's something that we want to see when we're looking for potential trade setups is confluence. So ideally right now, we're already seeing a little bit of a pullback. What we'd like to see ideally is another 1 to 3 weeks of sideways consolidation, a bit of tightening of the price action, which will give us a potentially lower risk re-entry point. Again, looking at the weekly chart, we'll see the SEI is at a new all-time high because it's a recent ICO. That's one of the best types of setups is, again, those at a new all-time high that are pulling back. So no resistance here. So we're keeping a close eye on SEI as it's consolidating here. Again, we'll send you a trade alert if we spot a low risk entry point. Next up is RNDR, which has recently broken out to a new 52-week high and is showing increasing relative strength. Notice the volume starting to pick up here. And we're looking for a potential pullback to the 8-day EMA or potentially a bull flag pattern that could develop here. So RNDR showing both short-term emerging relative strength, and on the weekly chart, we see that it's at a new 52-week high as well. And the last altcoin on our radar right now for potential trade entry is PYTH. And PYTH is another relative strength leader. It's a recent ICO. Notice how it's broken out to a new all-time high because the trade history is not too long. And we recently sold PYTH. We're in this as a swing trade, and we sold into strength for a 23% gain in the Morpheus crypto service. And now we're looking for a potential reentry, possibly on a pullback to touch this 20-day EMA. And again, looking at the weekly chart, we can see we've got the rising 8-week EMA. So somewhere between the 50 to the 55 cent area could present a relatively low risk entry point in PYTH. So we'll keep an eye on that one as well. And we're continually scanning the market every day, looking through our top relative strength watch list, which all of our members receive access to. Our high relative strength watch list is continually updated to show the strongest altcoins in the market. And then from this list, we scan through and look for the buy points once we've identified what the strongest cryptos are. And then we send trade alerts to our members if we spot any actual low risk entry points. Now, as promised, I told you we'd show you where you could find a potential buy point on Bitcoin if you're looking for an entry. So let's take a look at that right now. First of all, we've got two types of entries you could consider on Bitcoin. We've got a correction by time entry, which would be a potential breakout from the consolidation, or we've got a potential pullback entry. Right now, Bitcoin is merely going sideways in a tight range near its highs. Over the past week, trading in a tight sideways consolidation, holding above its 8-day EMA. So we've just got a correction by time. Very bullish price action here in Bitcoin, very bullish. So if we don't get a pullback, we'll look to see ideally another 1 to 3 weeks of consolidation in Bitcoin, as well as a dip below to run stops here would be a great entry point. And what we're looking for here is major support is right around the 49,000 mark, which is the prior high that we broke out above from the January high. That former resistance point should now act as support. Notice also, importantly, that we've got the rising 20-day EMA showing confluence coming into that horizontal support level as well. So if we've got a pullback to this 49,000 area, that's a great risk reward for a potential buy point. You can have a pretty tight stop there, and that would be a nice pullback entry. So we're looking for a potential buy point in the Bitcoin, either on a pullback to this 49,000 area, or if we get a bit longer of a consolidation, and then we can keep a tighter stop just below the low of this range. So that's what we're looking for in Bitcoin. And by the way, if you look at the weekly chart, you also see that this horizontal line I showed you goes back to March of 2022. You can see that that was a prior resistance level that also should act as support now. So you can see we've broken out. There's not a lot of resistance here. You got to go back to the all-time highs from 2021. So Bitcoin looking really bullish here in the short to intermediate term trend. By the way, it's a similar scenario with Ethereum. If you're looking for a potential buy point into Ethereum, it's important to have patience and discipline. Don't chase. You could wait for a pullback to the prior breakout level, which you can see we broke out above and came right down. After we broke out above it back in February 14th, we pulled back and held that level. See that? And that candle formed right there, held support, and now we've gone to new swing high. So we may not get another pullback. We've already had that pullback, but at least a touch of the 8-day EMA could present a relatively lower risk buy point. But if we do get any kind of a dip down to here, especially like an undercut with a swift reversal higher, that could present a relatively lower risk buy point in Ethereum. We hope you enjoyed today's video and found it to be educational in your swing trading journey. To join the MTG tribe and to receive our top crypto swing trade picks, head on over to morpheustrading.com and click on crypto picks to get started. And we'll see you in the chat room. And if you're not yet a member, we'll see you in our next video.